What's up everyone, it's Scotty with Money Investing. Welcome on board for another Market Open live stream here. We do have the employment report or the jobs report coming out in about 16 minutes or so. The markets are pretty much flat, only anticipating what those numbers are going to be like. Right now the QQQ is slightly down about 13 basis points. We've got the SPY pretty much flat, again no movement at all, and the Dow Jones is slightly higher, up over 5 basis points. So if you all can hear me and see me, just want to make sure the audio in the video is good. So just give me a thumbs up and we should be all set and ready to go. Volatility is slightly down, 70 basis points. So we are just a little bit over 25 right now. And then oil prices getting a little bit of a rebound. At the moment, we are bouncing off of that $87 per barrel support once again for oil. Bitcoin is once again just hovering back and forth in and around $20,000, and Ethereum also just moving sideways in and around 1,500. So Ethereum right now just under $1,600 right now. It's kind of moving up a little bit. So 1,550, 1,560 are going to be some support levels to watch for Ethereum as well. On the 10-year yields, we are up to over 3.2.5%, so pretty flat, but they have definitely been pushing higher quite a bit since the quantitative tightening measures kind of increased a little bit yesterday on September 1st, and they will continue to accelerate as the caps get up to over $95 billion. Some of the individual stocks here, so let's take a look at Tesla. Tesla's up a little bit over 40 basis points right now, so markets are, individual stocks are more or less, I think, green. For the most part. Tesla is up. We got Nvidia kind of battling through that ban that we got. So a little bit of a new license requirement from the US government, obviously putting some pressure on Nvidia. Although it got bought up very, very nicely from lows of about 132, right? We saw a rally over 5%. Right now just trading under 139. And then Apple just a little bit over 10 basis points. And Meta is slightly down about 40 basis points right now. So perfect. Welcome on board, everybody. We are ready to go, and in about 14 minutes, we'll get that unemployment report that everybody is waiting for. That's going to be the first big catalyst for this month. And then, of course, we've got inflation. We've got the Fed speech, Jerome Powell speech on the 21st. We've got quadruple witching. We've got options expirations later this month as well. So seasonality, there's a lot of things to pay attention to, of course, in the month of September. So going over to some of the updates, Meta and Qualcomm strike a deal to make custom virtual reality chips for metaverse applications. So Meta and Qualcomm are teaming up to develop custom chipsets for virtual reality products. The companies announced on Friday, and the two U.S. Technology giants have signed a multi-year agreement to collaborate on a new era of computing. And the extended reality XR Snapdragon technology. Extended reality refers to technologies including virtual and augmented reality, which merge the physical and the digital world. So Mark Zuckerberg says, and I quote, "We're working with Qualcomm Technologies on customized virtual reality chipsets powered by Snapdragon XR platforms and technology for our future roadmap of Quest products." So Meta pretty much flat, but let's take a look at how Qualcomm is kind of responding to this news. Also flat, not really a market moving event for these companies, but Qualcomm slightly up over 25 basis points. So Russia's energy influence over Europe is nearly over as bloc races to shore up winter gas supplies. So Europe's dependence on Russia gas appears to be coming to an end, which is a good thing. We want Europe to be, pretty independent when it comes to its requirements of gasoline because of, where prices are. And Russia obviously is doing some maintenance, and the fear is that they could continue to do that as winter looms, and then of course that could drive prices even higher. So potentially alleviating the risks further supply disruptions at a time when many fear that Russia could completely cut off deliveries during the winter. And Europe in recent months has endured a sharp drop in gas exports from Russia, and it has a bitter dispute between Brussels and Moscow exacerbated the risk of recession and winter gas shortages as well. China's e-commerce giant Pinduoduo quietly launches a US shopping site in Amazon challenge. So they're actually launching a new website called TEMU. Not really sure how you pronounce that, but this is going to be an online website, online e-commerce website that went live on Thursday, and listing items across a number of categories, including clothing, jewelry, pet supplies, home, and garden. And that could mark a new challenge for the U.S. e-commerce leader, Amazon, and this is the Chinese company's first major push overseas as well. Lululemon, I did a video on Lululemon yesterday. Yes, Broadcom also smashed earnings. We'll take a look at that company. It's pushing up 2% pre-market. We'll take a look at their numbers as well. But man, Lululemon, I really, very much like that company. It's just it needs to come down to better prices, better valuations. But right now, pushing up 9.5% pre-market, reporting better than expected quarterly results and issuing a very upbeat outlook. And the guidance was just really good. And Broadcom also rising 2% pre-market after quarterly earnings and revenue exceeded forecast. And the chipmaker also issued a stronger than expected revenue forecast for the current quarter. And CEO Hock Tan said Broadcom expected strong demand across all its markets to continue this quarter as well. Piper Sandler ups Tesla's price target but warns of vehicle price cuts ahead. So analyst Alexander Potter upped the firm's price target to $360 from $344 a share in a note to clients on Thursday, and he said that while the price cut to Tesla's cars may signal demand issues to some investors, it's actually a measure in helping the company address its backlog problem. So I can kind of reiterating their overweight rating on the company as well. But Daiwa downgrades Nvidia, says valuation is still too high given the weak economy. So, we've talked about Nvidia's valuation. I think Nvidia is one of those companies that is very good, very strong. But considering the guidance, the recent events that's taken place with the earnings, and of course now the U.S. government's new license requirement, the valuation now starts to become a little bit questionable, right? So Daiwa Market believes that shares of Nvidia need a valuation reset as the chipmaker faces a slew of challenges ahead. And analyst Luis downgraded shares of the company to neutral from outperform, saying in a note to clients on Thursday that uncertainty is ahead for the company as it grapples with new governmental restrictions and a weakening economy that could continue putting damper on its data center and gaming businesses. Alongside with the downgrade, they basically trimmed the firm's price on the stock down to $133. So that was a pretty significant cut from $215, right? From $215 to $133 was the downgrade. And the price cut, which represents about 4% downside from Thursday's close, because the price obviously was trading at really low levels. So that's going to be the update for the markets. Again, what's actually moving, what type of updates came out. We've got about 9 minutes left for the jobs report to come out here. And let me see. I'll break down Broadcom here in just a minute. All right, let's take a look at Broadcom AVGO. So right now the stock is up over 3.6%, so pushing past over $510 a share. Let's take a look. So EPS came in at $9.73 versus $6.96 same time last year, so it's a good 50% growth. Analysts were expecting $9.55. Revenue came in at $8.46 billion, up from $6.78 billion. Analysts were expecting $8.41. And for the fiscal year's fourth quarter, the company expects revenue about $8.9 billion. Analysts were expecting $8.7, and also maintain its quarterly cash dividend of $4.10 per share, payable September 30th to shareholders, a record of September 22nd. So very strong numbers coming in and pushing higher 3.6%. This is a very strong area of support to watch for Broadcom. Previous resistance, double top resistance from back in 2021. Where we got rejected at, then it got validated as support, very strong support, and right now we're just kind of bouncing off of that level as well. Yesterday, a lot of stocks had like a very long wick on the downside, and then they got bought up immediately, right? So we had a very similar pattern, similar candle for many stocks in the markets, right? Including, I think, Tesla, Nvidia. Nvidia was also like, it was actually selling off all the way down to as low as $132. But then, of course, lots of buyers kind of stepping in. AMD was crazy, right? Look at AMD. It was selling down to as low as $78, and so many buyers kind of stepping in all the way to push it back over $82 per share. So such a long wait on so many stocks was crazy. So Oscar says $133 for Nvidia. Does that mean $13 is the fair value? No, I think, yeah, sub $100 is going to be, I think my intrinsic value is what I've already talked about on the channel for Nvidia, based on the growth rate and, of course, based on the earnings multiple as well. All right, time for the poll, and we are going to run the poll here. I'm going to ask you all what you think about the jobs report. Right now, the consensus, let's just quickly take a look before we construct our poll here. The consensus right now for the jobs, I think it's for us to add over 293,000 jobs in the month of August, and the unemployment rate to stay unchanged at 3.5%. So that is going to be that consensus there, right here. So 293,000 non-farm payrolls, and unemployment rate unchanged at 3.5%. So we'll just do a poll here to see if you believe that unemployment rate is going to be coming higher or lower at 293,000. So employment today, higher than estimates, or in other words, greater than 293,000, or lower than estimates, less than 293,000. All right, so we'll see whether it's going to be higher or lower when it comes to consensus. Remember, if it's higher, that means it had a very strong labor report, right? So if you're above estimates, very strong labor report. Of course, the high range is going to be 390,000. So if you come in on the high end of that, the market could obviously fluctuate for the interest rate expectations, because a strong labor report means the Fed can be a little bit more aggressive when it comes to interest rate hikes. But a weak labor report, I'm not so sure this time around if the market's going to want to anticipate a pivot, since like we just made that mistake in that first episode when the markets rallied and the Fed literally just ruled out the entire Fed pivot. So David, lots of catalysts for Tesla on the horizon. What's my buy target? So I'm actually thinking about selling a $200 cash secured put on Tesla, maybe out to December 2022. So that's going to be about 3 to 4 months, about 100 days out in expiration. So I think the premium on that was about $8 to $9. So that's going to bring my cost basis down to the 190s. My buy target, as I'm sure you know, considering the intrinsic value, was sitting roughly at around 150 to 175. Because on a pre-split basis, that's going to be 450 to 475, around those levels. So 150 to 175 is kind of like that intrinsic value. But the closer I get to that price, I think the better it'll be. So 200 strike pays you about $8 to $9. It's going to bring my cost base down to 190s. So that's something I'm really paying attention to. Again, if stocks do sell off after this labor market report today, if you do see some more selling pressure, if Tesla gets closer and closer to 250s, then I would be very much interested in selling a cash secured put closer to $200 strike, bringing my cost basis down even further if assigned, down in the 180s, 190s. And of course, if not assigned, then that's a good premium. That's about $800, $900 in premium. Oscar, that's not $80, that's $800, my friend. Because you're seeing $8, right? So you multiply that by 100. One contract is 100 shares. So Chirag says, I sold a January $300 cash secured put for Tesla for $5,000 premium. Yes, Chirag, so that's pretty much in the money cash secured put, right? In the money cash secured put is gonna, obviously the assignment is pretty much gonna happen unless Tesla, of course, pushes up over $300 per share. But then, of course, your cost basis will be down to 250s, right? So you're still pretty much in the green on that overall trade. So, all right, about 2 minutes left for the report to come out. So I'm going to actually switch over to, I'm going to make this smaller, and I'm also going to include this over here live. All right, hold on. I just quit my trading view. There we go. Oh my God. Need to figure this out. All right, there we go. So right now, QQQ is still flat, only up 6 basis points, not really moving all that much, and SPY is only up 15 basis points right now as well. So we'll see. And again, let me know if you guys can hear this. I will play it as soon as that comes in live. So let me know if you can hear this.
very own team here. Guys, we're going to run around very quickly, and let's just give me a quick shot on what you think this number is going to be. Neela, why don't we start with you?
For the BLS non-farm, I'm at 290, though I think there's a big range. August is a notorious month for seasonal adjustment and the difficulty in measuring it, made worse by the pandemic and education and health over the last 2 years. These trends may make the range pretty wide in our estimates tonight.
All right, Betsy, let's get a quick number. We've only got about a minute to get through everybody.
Yeah, I'm just going to tell you that over the last 10 years, the August number has been 167,000 jobs fewer than the July number. So I think that's where expectations are. I think the real truth is that it's not just a measurement phenomenon, but we're going to see job growth has slowed but remains strong.
Okay, very quickly, Tyler, a number?
I think we're looking at probably about 350,000. We just have so many vacancies that it's hard for me to see us slow down by much more than that from
Sarah?
528.
Okay.
We're at 400,000 watching wages, labor force participation, and we think demand is stronger than expected.
Rick, quick number?
266,000, 266.
And Steve, what are you looking for?
I'm on the right side with Rick at 250. I think it's going to be a little less than expected.
Okay, again, the expectations, if you are calling what the consensus estimate would be, is for 318,000. Also, unemployment expected to be 3.5% if you're looking at consensus numbers. Average hourly earnings up by 0.4%. And Rick, we're going to send it over to you.
Yes, the numbers are hitting the wires. 315,000. 315 is non-farm payrolls. And if we look at private payrolls, they were 308,000. Now, let's get into the manufacturing. 22,000. That's much better than the 15,000 expected. And the unemployment rate, think household survey here, jumps up to 3.7%. 3.7%. That's the highest since February when we were at 3.8%. Now, if we look at average hourly earnings month over month, up 0.3. That's a bit light of expectations, up 4. It's definitely lighter than the up 0.5%, up 0.5 we had in the rearview mirror. And if we go from month over month, Becky, to year over year, it's 5.2%. Historically, a very juicy number, that's for sure. But we were expecting 5.3%. The high water mark is 5.6%. That was in March. Now, if we look at all the hours worked, the average hourly work week, 34.5. That's also about 1/10 light, both to expectations and to our last peak. And finally, the labor force participation rate, 62.4. If there's one area that I'm always happy to see the numbers expand on, that would be it, which means it's a post-COVID equaled high. It's the same as it was in March at 62.4. But for those listeners and viewers out there, pre-COVID in February 2020, it was 63.4. The labor force is smaller, even though we have so many job openings. And the underemployment rate, or U6, is 7%. That moved from 6.7%, which was a post-COVID low. And actually, in February 2020, that was at 7%. It's one of the rare metrics in the employment report.
All right, so unemployment rate jumps up to 3.7%, right? So if you come back over here, I'm just gonna reload this page. There we go. We're getting a little bit of a tick back higher. Here, 1 second. Let me just switch over to unemployment rate. Go. And there we go. So we have a little bit of a tick going from 3.5 to 3.7%. Now, this is interesting, right? So we are seeing a little bit of weakness in unemployment, right? We talked about how something will break. Something eventually will break as interest rates are going higher. You can't expect a very strong labor market. You can't expect strong economic growth while you fight inflation, because eventually things will start to turn. And we are seeing about 20 basis points increase, which is a pretty significant, noteworthy increase in overall unemployment rate. So let's just come over here. We'll go over to home. We'll just take a look at national unemployment here. We'll open up the new PDF. So 315,000 was the number for August 2022. So 315,000 increase in August, and the unemployment rate rose to 3.7%. Now, the interesting thing is the markets are obviously pushing higher, right? So now the QQQ is up over 89 basis points, and we've got the SPY up over 72 basis points. But here's my question. What is the market pushing up to? Another anticipated Fed pivot, right? So this was, I would say on the labor front, it was good number of jobs added, but unemployment rate edged up 3.7%. And we know from the Fed that they don't really care about that, right? What they really care about is inflation, right? So this, to me, markets pushing higher is just another anticipation of a Fed pivot. That's what it is, right? The market's pushing up after the unemployment rate edges up to 3.7%, which again is very significant, is just another anticipation that the market is thinking that, oh, the Fed might pivot because unemployment rate went up. So I'm going to be a little bit cautious. I'm not super pleased with the market's reaction, but unemployment, of course, 3.7%, it's, something had to give eventually. And now we're starting to kind of see that play through. So, so let's see some of the comments here. So everything green. The Vesteros, he says it's that dumb pivot narrative again. Yeah, that's pretty much what's moving the markets. Yeah, today seems like bad news is good news. Unemployment rate pushing higher, and the market seems to be pivoting back a little bit towards the narrative of a little bit of a conservative Fed. We'll just update this Fed Watch tool. So still unchanged. Again, we'll give it a 15 to 20 minute buffer here. And then once it loads up, we'll see where the Fed funds futures are for this particular number for the interest rates. But let's see which ones were the most added. Employment by industry here. So total non-farm payrolls was 315,000. Majority of, and then private jobs were 308,000. Service providing 270,000 jobs added. And then we've got goods producing 45,000. And then within that breakdown, we have professional business services 68,000 jobs, educational health services 68,000 jobs, and then information 17,000, financial activities about information 7,000, financial activities 17,000, and then leisure hospitality 31,000, and then other services is pretty much under 10, 12, 15,000 jobs added. So today will most likely stay green from a price action point of view. Yeah, I think the market's really starting to once again anticipate a pivot from the Fed, and Nvidia is up over 1% now. Tesla's back up to $280, right? Actually breaking out to over $281 at the moment, and Meta also up over 86 basis points right now, with Apple also pushing up. Look at that green candle, just incredible. Pushing up to almost 160 again, almost up 1%. So yeah, there we go. Now we're in a situation where unemployment is also starting to show weakness. We are seeing unemployment rate kind of push higher here. It's only a matter of time. So inflation, of course, is going to be the next big catalyst on September 13th. But let's see. All right, so let's take a look at our poll too. Let's see where we were for the polls. So, okay, now we have 63%. Well, expecting higher than estimates of 293,000. So we did actually came in at over 315,000. So that was well above estimates, and that's good. Yeah, so Oscar says, while higher interest rates, lower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses. Correct. So, yeah, I think the market's definitely, once again, expecting a very, very strong pivot. We've got the QQQ now up almost 1%. The 10-year yields are pulling back a little bit. So we were green. We were up to 2.5%. In fact, we got up to as much as 3.286%. We've kind of leveled off a little bit, down about 4 basis points from those levels, and just pulling right back down. So Spotlight, what do I mean by Fed pivot? You mean they're going to lower interest rates? Well, that's what the market is anticipating, right? Not lower interest, but not go as aggressive as what was anticipated before. So again, we're going to wait a couple more minutes to see where that Fed watch tool kind of ends up, the Fed funds futures. Give it a 15-20 minute buffer. Again, we're gonna see if interest rate expectations have shifted a little bit. So there we go. We're already starting to see a little bit of a shift. This was at 70%, and we're now up to 32% for a 50 basis points and 68% for a 75 basis points. But I'm really concerned here, and the only reason is because Jerome Powell has already mentioned that there's, the possibility for a pivot is just not there. There's very little to no possibility for a pivot in the short term. Loretta Mester, said on Wednesday that they are seeing interest rates go up to over 4% at the end of this year. So the Fed is aggressive, and the Fed will continue to be aggressive regardless of where the employment goes in the short term. Because their main goal is inflation, right? That's what they're trying to fight, and they want to bring inflation down. This is just the market anticipating again that the Fed might pivot. So Oleg says Fed Watch tool will have 90% for 0.5 after CPI. Well, that really depends, right? That really depends where CPI ends up being. If CPI comes in, higher than expectations, if year over year we go up, then absolutely there's no chance for 50 basis points. Forget about it. But if inflation obviously comes down, just like a very similar report to what we got for July, if month over month there's little to no change. In fact, if we actually see a decline there, then there's a possibility that probability shifts to 50 basis points. But what did he say about 75 basis points during the Jackson Hole Economic Symposium? Does anybody remember? What did he say about that? 75 basis points. Does anybody remember from the Jackson Hole Economic Symposium, what did he say about 75 basis points? Yes, Oli, that's a good point. All my Excel going down, so that's good. Yes, so Kang says large hike that will happen again. Yep, so he said that we had an unusually large hike that could be appropriate at the next meeting. So it's interesting, right? It's very, very interesting how much they're going to raise rates by. And that's literally what the market's pricing in right now. That's the only market moving catalyst right now. So, all right, let's see. Yeah, could. That's true. Could. So if they don't, but the thing is that they have to at least get up to above core, right? They have to get above core CPI. If they don't, well, then interest rates are still negative, right? Right now on a nominal basis, interest rates are 2.5%, 2.25 to 2.5%, because that's where we are sitting at the moment. So if you come over to the probabilities, right now the current rate is 2.25 to 2.5%, and core CPI is sitting at 4.6. Core CPI is sitting at over 5.9, I think, and core PCE is sitting at 4.6. So both of those are 2 to 3 times above where interest rates are. So real interest rates are still negative. So in reality, by the end of this year, what really needs to happen is that core PCE and core CPI numbers, they both need to either come below the interest rates, or the interest rates need to catch up and get above the core inflation. One of those two things has to happen. Either we catch inflation on the way down, or interest rate catch that on the way up, because then real interest rates will be positive. They will be back above zero. So Dave, he did. He's by the way, I love the picture right now. But he did. He said we had a 75 basis point hike back in July, and then another unusually large increase could be appropriate in the next meeting, right? So I'm pretty sure that's what he said. Let me see. So let's see here. Right here. So he says July's increase in the target range was the second 75 basis point increase in as many meetings. And I said then that another unusually large increase could be appropriate at our next meeting. So then, it begs the question, well, obviously the keyword here is could be appropriate. It's not definitive, like it's not that that's going to actually happen. But then the question really becomes, should the markets really be anticipating? Like, is this something that we should be buying into? The market's going to start anticipating again? In my view, I'm personally not. I'm going to be cautious because, well, we know what happened the last time the market tried to anticipate. And, the Fed pretty much ruled out the pivot and the markets came literally down in the next, 2 to 3 days. So it's really, this is just like us going higher without the green light of the Fed, right? The Fed hasn't even given us the green light and the markets are pushing higher. So yeah, so hope for a bit of red, prepare for a huge shopping. Yeah, if markets come down, I was actually planning on selling cash secured puts. I mentioned in our Discord, if markets sell off on the jobs report, I will be selling cash secured puts. So that's still going to be the plan. If we do see any weakness for individual stocks, there's 4 companies that I'm really paying attention to. There's going to be Tesla, AMD, Google, and Meta. 4 companies. If we see any red days, if we see weakness intraday, then I'll be looking at selling cash secured puts for those 4 companies. So, but yeah, the interesting thing was unemployment starting to creep up, right? It's definitely pushing higher, and something eventually had to give in. First, we had the GDP numbers. So now we're getting up to 62%. This number's come down from 68 to 62%. I really start to feel like this is so, I don't know. This is a little bit, the market's audacity to start pivoting again is just crazy. It's crazy. Yeah, but 38% now probability. If this number by the end of this day gets up to over 50%, that would be crazy. Like if just based on one unemployment report, we start to kind of expect a pivot again from the Fed. So, all right, let's see here. Volatility, yeah, let's take a look at volatility as well. Just 1 second, so. So yeah, very, very strong move for unemployment, 3.7%. All right, so QQQ's getting a little bit of a pullback now back. So we were up close to 1%. Now we're only up 15 basis points. And the Dow and the SPY is only up 25 basis points. At one point, it was up to almost $400. So the Westerosi Ninja says it's all about retail investors trying to front run a cut in interest rates in hopes of a recession. I think that's very true. I think it's just the market's trying to anticipate, because whoever anticipates first gets the best deal, right? Whoever anticipates late gets the worst deal, right? Think about it. If people anticipate a Fed pivot and they buy in, and the Fed actually pivots, well, then institutional money starts coming in on the green light from the Fed. So you are getting in a much better deal. So that anticipation risk is what's pretty much getting priced into the markets right now. And I think that's pretty much as simple as I can put it right now. Whoever anticipates a Fed pivot will get a brownie point from the market right now. So Rishabh says 100% about caution with pivot narrative here. Keep in mind the Fed is not thinking about raising rates until 2024 for at least a year, and then suddenly at the next Fed meeting did a 360. Yes, very, very true. So individual stocks here. Apple only up 60 basis points. We've got Nvidia up about 45, and Tesla once again 280, getting a big rejection there. $280 has been a very, very strong resistance for Tesla for quite some time. And then of course we've got Meta here, just up over 39 basis points. AMD is slightly up over 0.5%, but pretty much every stock seems like it got a huge rally and then coming right back down to some of those levels again. And the 10-year yields are on the move again. So we were selling off. So I mentioned that we were at the low of day. It pretty much came down to that mid-range, and we're now back at 3.284%. So if you go over to the 5-minute chart for the 10-year yields, the 10-year yields pretty much kind of sold off right after the unemployment rate came in weaker. Well, we added more jobs, but unemployment rate kind of edged higher. And now we're starting to kind of circle back to the high of day at over 3.8%. 3.5% is going to be that level. It's the high from back in June. That's literally when the rally started for the S&P. So it's we're very, very close to that level for the 10-year yields. And volatility, yes, let's take a look. So we are down 4.5% for the VIX, now under 25 again. So even after the pullback that we saw for the markets, we're still, for the volatility, not really pushing higher, but down about 4.5% now. So that big drop obviously comes in right after the unemployment report at around 8:25, 8:30 a.m. So in terms of earnings, we pretty much are done. This week we had CrowdStrike, we had ChargePoint, Lululemon is done, Broadcom is done. So pretty much most of the earnings are also done. We're going into the long weekend. So Monday, remember, the markets are going to be closed in observance of Labor Day. And then of course we've got inflation and the Fed meeting and SEP and all those things coming out later this month. So this is only the start, only the beginning for the month. So the 3-month yield is kind of rolling over a little bit, but the 10-year yield is on the move, and then the 20-year is up to 3.665%, and all the other ones are kind of rotating back down a little bit. All right, let's do our regular market poll, see where everyone's expectations are. And let's see, markets today. Should be interesting now that we know the unemployment report. All right, green, red, and flat. And also make sure that you like this video, like this stream, so it can get out to more and more people. More people can join us. And let's see if we can at least get this up to over 300 likes. Yes, Swapnil, can you do a poll for market today? I just did. Yeah, so we'll see. We'll see where we end up. On the QQQs, this right here is the chart that I wanted to go over. Let's see. So on the 15-minute time frame, we're getting up to $302, right? So yesterday we got a very, very nice bullish divergence on the 5-minute. So we were kind of selling off, making lower lows for the markets. And then there was also a higher low on the RSI. So very nice consolidation here. And then this was also a $293 support over here that we talked about. And then a very nice rally of 2% for the QQQs right over here, 2.2%. So right now we're expected to gap up a little bit to up to 301. Next resistance is going to be $302. So this right here is going to be that level to watch for QQQs sitting all the way up here. And then of course a resistance, a very strong resistance sitting all the way up to $307. That's where a lot of volume has been for the QQQs, all the way up to like inside this red rectangle as well, sitting all the way up to 305 to as much as $307. And then going over to the SPY here. SPY also expected to open at around 399. Well, just under 399. This is going to be that resistance level to pay attention to at $399. And then support level at sitting roughly 390. So Oleg, you are expecting another 2.5% move on the upside. Yeah, it was like last Friday. I think you mentioned 5% upside day on the NASDAQ, and that ended up being like so brutal. But yes, 2.5%. I mean, again, you know, for the markets to push up 2.5%, there has to be a lot of volume, right? A lot of volume. I doubt anybody's going to be playing the long weekend. I mean, Monday markets are closed. Volume is, you know, Labor Day weekend. I mean, volumes are not going to be super high in my opinion. So the volume has to come in for that much move, right? 2%, 3% move is not a small move, right? It's just, it has to have lots of volume. And I feel like with the long weekend, there's just that factor of who wants to hold over the long weekend. And people are just like, you know, no thanks. So we'll see. I mean, it's obviously not impossible. I mean, markets can certainly do that, but it needs the support of a lot of large cap tech. So Tesla, you know, Apple, Microsoft, some of those companies need to really push up 3 to 4 or 5% for the NASDAQ to go up 2.5%, which would be obviously a very, very green day for the markets in general. So, you know, yesterday's candle was also very, very interesting. A green candle, but a red day does suggest that there were buyers kind of stepping in. So we have pulled back, you know, a little bit over 11% from its recent peak. RSI's come down, MACD's come down. So we're starting to see a little bit of a momentum back higher on the upside. Perfect. Oleg says, I believe in a 2.5% as load the boat today. Great. So Cool is expecting there will be a huge sell-off before market close with a long weekend. So great. That's what makes the market, right? We've got two completely opposite expectations of the markets right now in the chat. All right, so we've got about 34 minutes till market opens. We've got plenty of time, so we can take a look at some individual stocks for you. If there's any companies you want me to look into, again, companies that we may not have necessarily covered on the channel. And I know when I ask this question, a lot of people are like Apple or AMD or like Microsoft and, you know, or Tesla. Like these are all companies that we pretty much talk about 24/7, right? Zim integrated shipping also, we talk about 24/7. Neo, I did a technical analysis yesterday. Nvidia, you even did a short video, talked about it so many times. So if there's any new companies, because think about it, right? We've got over 544 people. If you share one new idea, if everybody shares one new idea, and if you can find one good quality stock, it benefits everybody, right? We can add that stock to the watch list, and we can look into that company further. So new companies, fresh new, nobody's heard of them before. Sam, we've talked about Boston Beer in the past. Pretty much everybody knows about it. So, all right, let's see. Trade Desk, Ranger, I would love to take a look at that company, but we've talked about this channel a million times. All right, Coinbase, Dow Chemical, Lockheed Martin, let's see, GD, what is that? So GD, General Dynamics. All right, I don't think I've ever analyzed this one on the channel, but 2.24% dividend yield. We got pretty stable revenues. It's up 7.8% on the year. A very nice pattern on the day. Let's take a look here on the weeklies. Yeah, pretty consistent pattern. I mean, from the lows, pandemic lows, it's actually up 138%. I would watch your resistance around here for General Dynamics, right? See, we're still getting Amazon. So, okay, Twilio, Remke, I've done a video on Twilio. Amazon, we pretty much talk about every day. Lockheed Martin, again, we've talked about it. Twilio, I've done several videos. Occidental, I've done several videos as well. So yes, I'll take a look at MongoDB as well. right now for General Dynamics, there will be, this right here would be the nice range. You can see the previous resistance coming in from February of 2018 where it got rejected at. And then we got a support over here sitting perfectly, resistance at 248, support at $208. We got a lot of consolidation in that range. I believe the valuation is low, but I'm not too sure about the balance sheet for the company. Trading at 19 times earnings, I feel like the balance sheet may not be super great for General Dynamics. Yeah, so they're sitting on over $13 billion in cash versus over $2.2 billion in debt. So, that's something to keep in mind here. Current ratio is going to be over 1.4. But the margins are obviously really, really low. It's more of a value play, right? It's a value stock and a dividend stock. 2.24% is decent dividend. So it's going to be a more like a value oriented, like a slash dividend stock. Okay. So Alibaba, yeah, we talked about that as well. C Limited, again, videos have been done on C Limited too. Again, all great companies. We've analyzed them, but let's see. Credit Suisse. Credit Suisse is actually not the best bank, in my opinion. It's kind of like it's a bank that has a lot of issues. Unfortunately, it's one of the few banks that's kind of like not doing super well. You can pretty much see it with the pattern, right? You can see how much of a downtrend it's been. So Credit Suisse is one of those companies that, it's one of the biggest banks, but also pretty much, well, not one of the biggest banks, only 12.7 billion. But it's really just going down and down and down. So, I mean, I would just stay away from Credit Suisse. Netflix for today. Netflix we cover in our daily market updates here. ADP is a good one. So automatic data processing. So this is a company that we haven't, necessarily looked at on a more fundamental basis. So this is a great idea, right? ADP. So thank you for mentioning that, Roraz. Again, I'm sorry if I mispronounced your name, but look at the pattern, right? This is the weekly chart. Since 08, ADP is up a little bit over 1,300%. Very consistent, very strong uptrend. That's what we're looking for. And then if you take a look at revenues, look at that. Very consistent, stable growth in revenues from 13 billion all the way up to 16.5 billion. Profitable. So valuation's a little bit high, right? So 35 times earnings, 6 times sales, 32 times cash flows, and over 24 times enterprise value to EBITDA. So valuation is absolutely really high for ADP right now. The balance sheet here, looks like they've got a lot of liabilities and debt. Yeah, so liability is almost $60 billion. It's supposed to be a software company, isn't it? What do they have in terms of liabilities? Gross margins are 46%, but I'm interested in taking a look at what their liabilities are. So current liabilities, other current liabilities is over $30 billion for the company. Might have to take a look at their actual income statement and their balance sheet to figure out what this $36 billion is in current liabilities. So that's, again, due in under 1 year. So would be interested in taking a look at that. But yeah, balance sheets, I would need to take a look at. Cash flows have been, let's see. So cash flows have been growing. That's good on an annual basis. They've kind of plateaued a little bit over the last 3 years. So free cash flow is good. Income statement is also good. Consistent growth in both revenues and earnings. But two things, valuation and balance sheet. Those are the two things that kind of concern me a little bit. So, I really pay attention to support levels around here. 191 closer to $200 for ADP. Okay, let's see. JP Morgan we have talked about. Opinion on XBI. Biotech we've also gone over several times, but let's see. Let's take a look at so levered ETS, TQQQ, we can take a look at that one as well, although we have talked about it. Shopify, we cover in our daily market updates. And TLT bond, right now selling off quite a bit, again, because of the Fed tightening and the quantitative tightening, everything that's going on with bonds. So again, inverse correlation with yields and interest rates, yields and prices. So as yields are going up, prices are coming down. So yes, MongoDB, let's take a look. So right now, wow, 25% down after earnings yesterday. So support level, is going to be very strong at around 215s. We've got a little bit of a validation there for MongoDB there. There's also going to be some intermediate support here at around 237, like almost exactly where the price is trading right now. So we got a little bit of a validation back in May. This was also previous resistance for the company in the past. So we've got very strong revenue growth, but it's not profitable. So earnings are not there. So net income $306 million, actually net loss of $306 million because it's not profitable. Shares outstanding have also gone up from 50 million to over 67 million. Not a huge deal. That's about a 17 million share dilution over the last 6 years. It's not really a big deal. But again, price to sales at over 20 times, right? 20 times sales right now is where the company's trading at. So really expensive. That's even after the 25% drop yesterday. So it would need to come down another 50% for the price to sales to drop below 10. So right now, not super interested in this one, but 50% would put us roughly around 117, 120 levels at the moment. So Kathy's selling Tesla and buying Nvidia. What do you make of it? So I don't know. Like, it's really interesting. I was reading that earlier today that Kathy Wood again bought Nvidia, but she sold just a few weeks ago. Literally, I think not even a few weeks, just about a week ago. She sold Nvidia and now she's buying it again. So I can't make any sense of all of her trades. So PERI, let's take a look at what that company is. So Perion Network Limited, PERI. So I'll go over a lot of stocks, but I also want to go over stocks that I don't know, right? If there's a ticker that I don't know, I will definitely take a look. But if there's tickers that I obviously do know, I mean, chances are we've covered that, right? So, like for example, this one, Perion Network, no idea what the company does. Looks like it's got decent, good revenue growth. And we got earnings growth as well. Seems like they are profitable. Year to date, they're down 17%. I'm going to take a look at the market cap first. Just want to make sure it's not. Yep, so it's 900 million. Not going to cover that either. Anything under $1 billion, not super interested in that one. But let's see. NLY. All right, NLI Capital. All right, so we have some analysis on it. So it looks like we have covered it. 13% dividend yield. So, okay, so it's a REIT, Real Estate Investment Trust. What's going to be really interesting is what their portfolio is kind of consistent of, like residential credit, commercial credit, and middle market lending, and based out of New York. So again, their portfolio is what's going to really matter for this company. And then, of course, the price to funds from operations is going to be the better metric to look at for a REIT. REITs actually tend to do a lot better in an environment where interest rates are going higher, but they are up from June a little bit over 24%, but from highs of 2021, they're down about 24-25%. So not as aggressive as the market, I would say. They've got a decent yield. Of course, 13% is really good, but you also got to pay attention to what their portfolio is made up of and the sustainability and the future of that portfolio. Right now, I don't have access to that. For any REITs, I can possibly take a look at their portfolio right now. All right, let's take a look at WIMI. Vimy Hologram Cloud. Man, you guys are bringing up some really interesting companies like Perion Networks, Vimy Hologram Cloud. Like, these are just like words I've never heard before. But this is, okay. Market cap, 150 million. Yeah, no, sorry. That's a really, really low. It's like a small micro cap stock. So we can't possibly take a look at this one at the moment. PHG is, again, New York Registry shares. Wow, down quite a bit. From $60, 72%. Dividend yield 4.7%. We have no fundamentals to look at. So, okay, so we do have something. Revenue 26 billion has gone down to 20 billion. Net income has grown in that same time period. And then the shares outstanding have also been bought back. That's good. And then let's take a look here. So they've got so they've got almost $8 billion in cash versus $2.6 billion in $8 billion in debt versus $2.6 billion in cash right now. So, and then of course valuation is really low. But yeah, I mean, there seems to be pretty significant sell-off. I mean, from back in April of 2021, 73% drop is pretty crazy. So, but yeah, since 02, it's only up 107%, 652%. So I would really just pay attention to the support here around $12.89, closer to $13 for this one, to see if we actually get a reversal. I mean, RSI is MACD really, really oversold. And this is a stock that we can maybe look into a little bit further. So, all right, let's see here. AMC, I know that one. AMAT, I also know Applied Materials. But let's take a look for you. So this is going to be, again, the weekly chart. Very nice, consistent validation at the 200 simple moving average, right? So perfect support here. Nice support here. Decent support here. Although we did get a little bit of a breakdown, then we are kind of bouncing back higher from those levels. And right now we're just getting back down to that 200 SMA again. It's down a little bit over 46%. Very consistent revenue. Annually, it's been growing over the last 3 years, and so is the net income. 12 times earnings, really low valuation multiples, 3 times sales, 14 times cash flow, and enterprise value to EBITDA under 10. So that's really good. And then shares outstanding have also gone down. So they've been buying back their shares. Also very, very good sign for Applied Materials. Free cash flow is growing. And then the balance sheet, let's take a look here. All right, so they have, plenty of cash on the balance sheet versus long-term debt. So this is a stock that I'll definitely add to my watch list here. And then we'll do some more analysis on this one. So, and I think I do have this. If I don't, I'll add it to the semiconductor watch list as well. But this is a stock that we can definitely analyze further. All right, let's see. Marriott International, MAR, 0.78% dividend yield. Yeah, they had a pretty significant decline due to COVID, right? So revenues basically fell from 20 billion to 10 billion, so that was a 50% drop. And then now they're starting to kind of recover. So on a more quarter-over-quarter basis, you can see how the revenues are actually going back higher. But annually, they're kind of got a huge cut, and they're now starting to push back higher. But year to date, they're down only 6%. That's good. And because of the lower earnings, the valuations come up to over 29 now. So it's now starting to trade a little bit of a higher multiple because earnings are really, really low. But this number can come down very easily considering that earnings will accelerate in the future. So as earnings grow, then this P multiple can come down very, very quickly. So I think the balance sheet won't be great for Marriott, just because it's usually not for these types of companies. So there we go. We're sitting over 9.8, almost $10 billion in debt with under $600 million of cash. So the balance sheet's a little bit of an issue. The valuation's a bit of an issue. But valuation can certainly become more appealing as earnings consistently grow quarter over quarter. Gotta hear me out, XRP. So XRP, I think I have it on my over here. I think, yeah, so there we go. We have it on our crypto watch list. Just to keep track. Again, we've got, of course, Bitcoin, Ethereum, and then XRP, and then a few other ones. Isn't XRP is XRP different from Ripple, or is it the same thing? I'm pretty sure it's the same thing, right? Is Ripple the same thing as XRP? So all right, GTLB, Oleg, I'm sorry if I missed your messages. There were just like so many going across. So GTLB, GitLab. All right, so what do we got here? 7.4 billion market cap, good revenue growth. Okay, XRP is Ripple. Okay, good. Revenue growth is good, but unfortunately not profitable, down 42% on the year. Valuation-wise, they're trading on 30 times sales, Oleg, so a little bit on the high end. Well, not just a little bit, really very much on the high end at 30 times sales. And everything else we don't really have. Good gross margins though, right? So 88% gross margins and then negative 49% operating margin, right? So if you have just those two things, you can already start to get a good understanding that, okay, they're spending a lot of money on operating expenses, right? They're spending a lot of money on SG&A, marketing, advertising, salaries, wages, all those things. They're spending a lot of money on those things because you've got 88% gross margins and then negative 50% operating margins. So they're spending a lot of money. So I'll add it to the watch list. Definitely will probably do a video on them very soon, but there's a few different issues with them. Valuation is one, 30 times sales is really high, and then of course profitability and the bottom line. All right, let's take a look at Amgen. So this one I've actually analyzed in the past. Amgen, I really do like. It looks like we had a trade idea on this as well previously. But lots of consolidation. Actually, this is, I need to update this chart. All right, so very nice consistent move above its 200 simple moving average. Every time on the weekly time frame, every time it's come down to the 200 SMA, it's got a nice bounce back higher. Looks like now it's got a pretty strong resistance here at around 252. So, that's going to be that resistance level. And up over 9.7% on the year. Very, very nice, consistent revenue. Earnings have been declining a little bit. And they're trading at 20 times earnings, under 5 times sales. So valuation is not like overextended by any means. And they've been buying back their shares pretty aggressively. So they've gone from 754 million shares down to now 558 million shares. So they've been buying back shares very, very nicely. Cash flows have also been kind of back and forth. They peaked out in 2018 at over $10 billion in cash flows and have kind of been sideways. And then let's take a look at the balance sheet here. Sitting on over $34 billion of debt, of just over $8 billion in cash. So not like a huge issue, but definitely something that is worth taking a second look at. And then current ratio 1.5. So I don't think the growth is super strong. I mean, it's just been, pretty stable. It is growing, but, I would say single digits revenue growth, and earnings have been declining. So does a 20 times P multiple really justify the growth for this company? It's kind of questionable, right? So support level I would pay attention to is going to be that 200 SMA, $209, and resistance staying put at 252. ESTC, so that's going to be Elastic, okay. Looks like we have some analysis on this as well, but let's see. $7.7 billion, again, good revenue growth, very strong, consistent growth in revenues, 159 million to over 862 million, but not profitable. So we've got 8 times sales. It's come down from 17 times sales to over 8.6 times sales, but still, I would say it's a little bit higher. Gross margin 63%, operating margins negative 23%. So once again, it's similar to what we looked at for GitLab, spending a lot of money on operating expenses, right? So SG&A, marketing expense, all those things, they're pretty much spending a lot of money there. Balance sheet. So they do have more cash than debt. That's good. So negative net debt. That's exactly what we want. So negative 269 million. So that's good. And then cash flow is positive but declining over the last couple of years. So there's a few issues there I would look into is the valuation, 8 times sales, a little bit on the high end, and then of course profitability, which is still yet to be seen with this company. So resistance I'd put on is about $96, $97. Previous resistance, support here, resistance there, and then getting a little bit of a validation of support at around these levels, roughly $58, $59 for this one. All right, so we got about 12 minutes left. Now we can get back to the actual indices and stocks here. So QQQ's now back up over 90 basis points, SPY also pushing up 90 basis points, and the Dow Jones here is also up over 75 basis points at the moment. We got volatility now down over 6%, so really coming down pretty aggressively. Oil prices still getting a bit of a rebound at $80 per barrel. And of course, Ethereum, Bitcoin just hovering around their respective support and resistance levels. Apple getting up to 160, getting a bit of a retest there, but up over 1% right now. We got Meta up to 167, so up over 1%. And Tesla now validating $280 as a good support, now up over 1.4% at the moment. And Nvidia is only up 69 basis points right now. All right, I'm sorry, guys, if I didn't get to your stock. It looks like Dead Man Walking. I am very sorry. Let me see what your stock was. XPO. Again, there were too many stocks to go over. I apologize if I missed any of them, but we'll continue to kind of do analysis on your stocks in the future. But let's see, XPO Logistics here. Again, it's a logistics company, so because of COVID, revenues declined in 2020. They're now starting to get back higher, even though like on a quarter-over-quarter basis, they're pretty stagnant, right? So not really moving upwards. Down 32% on the year, trading at 8 times earnings, under 1 time sales. So valuation is not an issue. And cash flows here have gone from about 142 million to 408 million. They've been kind of fluctuating a lot for this one. And let's see, for the balance sheet here, yeah, so they do have a lot of debt, $4.4 billion in debt versus cash sitting at just over 260 million. And then let's take a look at their margins. We got 18% gross margins, very, very low net margins for the company at over 4%. So, and do they pay a dividend? I'm assuming they do. Okay, they don't. So this one is going to be, a little bit of the company that needs to recover. I feel like it's just the revenues are, on the last couple of years, they are up. But the growth really has stagnated over the last 4 quarters, right? It's not really, quarter over quarter is not really growing. So we're not seeing a recovery back to pre-pandemic levels for this one at the moment. So something to keep in mind for this one. And Aaron, welcome on board. Thank you so much for joining. I really appreciate it. And yeah, I do apologize if I missed any of these stocks here. I mean, we tried to cover as many as we could. But again, we'll do more of these longer live streams. We'll do more of more analysis there. Palantir, no, not yet, Brandon. Not really picking up any more shares at the moment. So on why are markets green if job numbers are high? Well, unemployment edged higher to 3.7%. So unemployment was pushed up from 3.5 to 3.7%, and now markets are once again anticipating a pivot from the Fed because of the weaker labor market, weaker economy. In other words, unemployment rate pushing higher. So there we go. We're 64% for a 75 basis points and 36% for a full 50 basis point hike. So I wouldn't be surprised if by the end of today, or by tomorrow, or like over the long weekend and then Monday and Tuesday, this also starts to pivot once again back towards 50 basis points, right? So yes, Vitruvio, ASML is a very big company. I know that somebody mentioned ASML. We have taken a look at that company. So Venkat, ASML, I've done a complete analysis on them. It is a semiconductor, like a chip stock, isn't it? No, it's not. Okay, I'm thinking of a different company. I'm pretty sure I'm thinking, actually, no, it is. It is, right? Yeah, it's a semiconductor company. I've done an analysis on this. I've done a video on ASML, like a complete detailed video on this one. So make sure that you do check that out if you haven't already. Literally just go to the search bar and type just money vesting and ASML analysis, and you will get that. So we've done a full analysis on this stock. Creed, thank you so much. I really appreciate that donation and appreciate it. And if you have any questions about any stocks, I'm happy to go over those. Skill shots, do I think Nvidia is a good buy at the current price long term? For me personally, I'm going to be a little bit more conservative here. Their guide was not super great. So for me, the price is going to be a lot lower. My buy target is going to be in the low 100s. So it's not going to be for me. Because I'm also a little bit more conservative with my estimates. It's like Lamb Research. Okay, yeah, that makes a lot of sense. All right, so we got about 7 minutes left for the markets to open. We got Meta up over 1.3, Tesla pushing up to almost 282 right now, and Nvidia trying to recover also back over 141. Yes, they make equipment for producing semiconductors. Yeah, there's like a whole detailed analysis that you can check out. We also went over, their website and what they actually do. I think they're based out of somewhere in Europe. I forgot what the country was. I think, yeah, they're based out of Europe. Yeah, based out of Netherlands. Screenshots, perfect. Thank you, thank you. Love from Australia. Appreciate it. Yeah. Perfect. So volatility down 6%. Markets once again pushing higher very, very much. We got lots of individual stocks also green. So it looks like a decent close is on the horizon for the markets. On the week, we are still down almost 3%. So we'll see if we actually do end up closing green for this week. But September, obviously, we are starting off with a decline of 0.26% for the NASDAQ. S&P down a little bit over, well, S&P is up 30 basis points on the month so far. And we'll see, after today's rally, we might be up over 1% on the month. Well, I love from Netherlands. Great. Shout out to you as well. Thank you. We will have a meet and greet when you come to the United States. Yes, so we are planning something very soon. We'd love to obviously meet with all of you and get together and, It's crazy because, yeah, it's just sometimes it gets crazy, right? Love to meet with all of you. So, all right. So we're gonna switch over to the indices now. Yes, Brandon says tattooed chef taste test video. So yes, I'll do a live stream. I'll literally just record going into Target, just picking up a pizza or something, heating it up, and then just going live to taste test it. It would just be a little bit unusual, but hey. So we'll see. But I've never really been a huge fan of frozen food, because I prefer fresh fruits and vegetables and all those things. I've never been a huge fan of just frozen stuff that you can just heat up in the microwave and then call it a day. I've never been a huge fan of those, but it doesn't mean that I haven't had that in the past. So, really, I could never see myself doing it on a more consistent basis, but definitely would try it out to see what that what the fuss is all about. So, So Creed says AMC and GME. So Creed, thank you for the donation. I'll go over those two stocks for you. All right, let's take a look for AMC. Right now, down almost 6%. So we had the APE preferred shares, right? So obviously that's one of the reasons why AMC has been selling off. Think of it as a 2-for-1 stock split, where the company is just issuing additional shares elsewhere in a different listing. So combined, that's the value of AMC shares, right? So APE is, down to now 450, so down another 6.3%. So this one obviously needs to find new lows. It's still in price discovery at the moment. And AMC, in my view, I think it's got a support, I would say a pretty good support, sitting roughly at around, $6. So that right there is going to be that strongest support, I would say, for AMC at the moment. GME, we've got, I would say, support level, very strong support here at around these levels at $19, almost $20. And that's about as much as I can pretty much go over for these companies, because I have really not been following up with AMC or GME. Pretty much, we don't even cover that. So, all right, so off we go in about 1:30. Final day of the week, long weekend coming up. Volatility could be, a little bit higher. Considering the VIX is down over 6%, we could see some fluctuations, a little bit of indecision, how the market starts to price in that report, what type of expectations we get from the Fed funds futures. Maybe not right now, but throughout the day, do the Fed funds futures kind of flip back and forth? So it should be interesting. And again, just a reminder, Monday the markets are closed, so you definitely don't want, if you're not planning on holding on for the long term, for the long weekend, then definitely make those decisions today. All right, so there we go. And then individual stocks we'll be paying attention to. So SPY is expected to open now above 400. This would be the support level. I'll actually flip that over. So this will be the new support intraday to pay attention to at around 399. Wouldn't be surprised if we do get a retest 399 before pushing back up. And then for QQQs, we're going to be opening up at around $302. So we'll go ahead and turn this level into a support now, since we are trading above this level at the moment. So let me see what the poll was. 57% expecting the markets to be green and 30% expecting the markets to be red. So we are all set and ready to go here. Boom, boom, boom. A caddy calendar. All right, so NASDAQ opening up over 90 basis points, S&P opening up over 95 basis points, back up to over, all right, let me switch over to the S&P here, over 4,000. So we're pretty much back over that psychological support, over 4,000. The NASDAQ here opening up back over 11,800, up over 85 basis points. And the Dow is also up over 71 basis points at the moment. We got Apple up over 76, Nvidia up over 1.3, Tesla is just kind of like at $280, and Meta also just under 167 right now. Tesla, I'm looking at $200 strike puts, December expirations. So that's something that I will be paying attention to if the stock turns red. I will be looking at that potential opportunity. And then for AMD as well, I was looking at $65, $70 strike puts. Again, same expiration out. For some reason, AMD's premiums are really, really low. And then I was also looking at Google's 100 down to $95 strike puts for December out. It's about 100 days, 105 days, I think, just over 3 months. So I think those are good premiums as well. It's going to pay you like 4.5%, 5% over that time period. So that's going to be the plan. But so Oscar, do I see more downside? Not necessarily. I feel like I have enough Palantir. I mean, it's just under 2% of the portfolio. Again, I've shared the entire portfolio allocations with all the members in the Discord and the Patreon, so you can kind of access that as well if you want. But for me, Palantir is a little bit more of a speculative play. And I've always mentioned that when I'm kind of personally building the portfolio, 75 to 80% is kind of like what I called core positions. And my core positions are going to be companies that meet both the quantitative and the qualitative analysis factors, such as companies like Apple, Microsoft, AMD, Google, Tesla, like those companies. And then, of course, Meta, PayPal also, and Amazon. And then some of the more speculative companies, such as Palantir or, could be Neo, because those are companies that may not be profitable necessarily right now, but have a lot of potential for growth in the future. I try to keep them under 4 to 5% of the portfolio. They can get into a much bigger position in the future, especially if they execute, but I like to keep them to a minimal allocation. So yeah, for Palantir, not necessarily that I do see a downside, but it's just that I'm pretty well allocated in that stock, right? I don't want to be over allocated by buying more. So QQQ's getting a little bit of a pullback at the moment. So $302, we'll go ahead and turn this level back into a resistance. Right now, since we are coming back down, we're all starting to fill in that gap, so that's okay. I mean, first 15 minutes, it's okay to see a bit of a pullback. Usually what we see is like whether we're gapping up or down. Whether we gap down here, first 15, 20 minutes, we see a bit of a push higher, right? And then the real trend begins. And then if you're gapping up, we see a bit of a pullback to kind of fill that gap, and then the real trend really starts. Ankur, yes, so I can maybe open up a few more spots if you're interested. I'll do that after the live stream, and you can join in if you want. So yes, Victor says, I think the Fed will be more hawkish since there's still more room to raise rates with the job report. I agree. I think the 75 basis points is pretty much a done deal. They're not going to stop until inflation is back under control. And the only way I see even smallest possibility for us to see a 50 basis points in September is if inflation on September 13th comes in very, very good. Like I'm talking really good reports. Not only do we see a year-over-year headline number come down to possibly under 8%, or the month-over-month change to be a decline. Like month-over-month prices actually went down, right? Like negative number. That's one of the ways where I could see like, okay, the Fed might really start rethinking about how much they want to go higher in September. And if core also comes down because they pretty much watch core inflation more than headline. But other than that, I think they are pretty adamant about what they want to do and how much they want to raise rates by. So, and Loretta Mester, right? She is a voting member in the FOMC this year. Just said Wednesday, right? She said that the interest rates need to go up to 4% by the end of this year. We're sitting at 2.5%. That's 150 basis points. 150 basis points. How do you squeeze them in 3 meetings? You have to do 75, 50, 25, or you have to do 75, 50, 0, or you have to do like 75, 25, 50, or you have to do like 50, 50, 25, like something, some of those combinations, right? To get up to 4%, because that's going to be another 150 basis points. So, David, yes, I already went over Lululemon. I actually did a full video on Lululemon as well. So you can check that out on the channel. But the earnings were very good. So great company. I really like Lululemon very much. It's just that valuation wise, it needs to come down a little bit lower for me to really be interested. So S&P also just pulling back slightly, still up 53 basis points. Both of the indices are. Right now we're just coming down to kind of fill that gap in, back under $400. We opened at around 443. So we'll see. I mean, the most important thing right now in the first 10-15 minutes is just a gap fill, right? That's all we're doing. The indices are coming down to fill the gap that we left after gapping up. And then it should be interesting where we end up moving intraday. So Nvidia now is down over 1%, back down to 137. Tesla back under $280. Seems like it's struggling there a lot. $280 just can't seem to break out over that level. And then you got Meta Platforms also pretty much flat here on the day so far. LABU, I need that stock to be down maybe another 5-10% so I can close out my covered calls. All right, so it's up another 1% today. So yeah, I'm gonna keep a close eye on biotech as well. So Oleg, quick opinion, which is better, UA versus Lulu? I haven't taken a look at Under Armour, but Lululemon I can tell you is just incredible in terms of fundamentals. I mean, we did an analysis on, let me see if I can bring that up. So that's going to be my spreadsheet on Lululemon. We're going to open that up. So, I mean, the fundamentals are just phenomenal, right? I mean, you look at these numbers and it's just wow, right? From 2009, this is a 14-year history for the company. They've grown revenues by 24%, like every single year. That's a compounded annual growth rate. They're guiding for 7.9 billion this year, fiscal year 2023. That's going to be a 26% growth. Margins, they've averaged about 53%. Operating margins, they've averaged about 21%. Net margins, they've averaged about 14 to 15%. Net income has grown by 28% over the last 14 years. I mean, they've been profitable last 14 years, and let alone they've grown by 28% in the last 14, 15 years. Shares, they've bought back shares every single year over the last 14 years, 0.68%. So that's very good. Earnings per share have grown by 29% over the last 14 years. EBITDA grown 27%. Market cap has obviously gone up 25%. That's pretty consistent, right? If you think about it, that's pretty consistent with how much net income and EPS has grown, right? Of course, it's up another 9% today, so this is probably sitting at, I'm assuming, another $42 billion at the moment. And then very good balance sheet, plenty of cash, little to no debt, They've only got some deferred revenue, income tax payable under long-term debt, long-term liabilities, and then some non-current operating leases that they have. Free cash flow, 58% growth. The only issue obviously is a little bit of valuation, but I'm gonna let that slide if it does come down a little bit lower. But it just needs to come down to better pricing, and I would be very much interested. Yeah, so Under Armour, I can definitely take a look. We can do some more analysis on them. And Under Armour could very well also be a very good company. I don't think there's like a big comparison like between it's Lululemon or Under Armour. They both can be very good companies. Also, I think targeting different markets. I think Lululemon is a little bit more, I would say, like higher end target market, and Under Armour is pretty much, I think, a sports brand, very similar to how I see Nike or Adidas or something like that. So Palo Alto Networks, again, we've done some analysis on some cybersecurity companies. We've looked at Palo Alto Networks as well. Unfortunately, not profitable yet. They have just turned the corner a little bit in the most recent quarter, fourth quarter 22. So it's on the watch list, but I feel like cybersecurity companies trading still very high multiples. 10 times sales is okay, not bad, but I definitely want to see profitability and strong free cash flow, consistent free cash flow growth before I can start to invest in this one. Support level at 532 all the way down to 460s for Palo Alto. All right, so let's see what is going to be. First 10 minutes are done. We are seeing Meta roll over. We're seeing Tesla roll over. We're seeing Nvidia roll over. And we're seeing Apple also struggling at 159, 160s right now. Warner Brothers Studios, Warner Brothers Discoveries. I'll add this to the watch list of stocks or companies that I want to do videos on. So I'll definitely add it to this watch list here, WBD. We'll definitely take a look at that one. Wow, Zim down below $35 now. Really selling off quite a bit here. Since its dividend X date, it is down a little bit over 16%. So not a surprise. Should really not come as a surprise to anybody who's been tuning in to our live streams. We've been talking about this for a long time. I think the dividend yield. Look at 77% dividend yield, right? There's a price for that. Which is capital, right? Nothing really is free in the markets, as I mentioned earlier. The ex-dividend date is something that people watch very closely for such high dividend pair stocks. And as soon as the ex-dividend date is over, you expect big sell-off for these types of companies. So I would say support roughly sitting at 31. We've got a little bit of rejection there back in June, and then some validation for support here, roughly sitting at $31. So that would be the next level to watch. Lululemon is a lifestyle. GKP says, yeah, I think they're also launching their subscription model, right? So I think it'll be $39 per month subscription model, and where they will be hosting events, in-person events, product drops, first come, like first discount and first reveal for those members. So I think that'll be pretty cool. I don't have a single item from Lululemon. I've never purchased anything from Lululemon, but I know they're really high quality. But yeah, I think the fundamentals speak for themselves. It's been really good in terms of numbers overall. So Oleg, when Zim dividends will be 100%. So that is, what you're saying, so they paid about $5 in dividends in this quarter, right? $5, if you do the math, $5 divided by whatever the price is trading at right now, 35. That's about a 14% dividend yield. So theoretically it should have been down 14%. Right now it's down 16% from that ex-dividend date. But the problem is that $5 in quarterly dividend that they're paying is not going to be annualized at the same rate moving forward, because the $5, the reason why it's so high is because of higher net income, right? Higher earnings. And that's why they're able to pay that much. So 100% dividend yield might sound great on paper, but it just depends, can they analyze that earnings yield in the future? Can they continue to earn those earnings to pay out those dividends? And if the answer is no, well, the dividend yield will also drop because they're not expected to pay out that much in the future. Because if you go over to where the analysts have them pegged in terms of earnings for the next 2 years, they're expected to come right back down, right? So I showed you guys that in our previous live stream. So if you go over to Seeking Alpha here, and if you take a look at ZIM, you'll notice the earnings estimates are expected for ZIM's EPS to come down from $42 back down to $5.45, right? So they've pretty much been paying out these dividends out of their earnings, right? $42 is where the earnings or dividends are coming from. So, if they come down to $5.45, you divide that by 4, because there's 4 quarters in a year, $1.36, divide that by 35, that's a 3.88% dividend yield, right, on the entire year. So that's how the math would work out eventually once the earnings kind of stabilize. Me Marky says dividends are a trap in my opinion. Neo here, let's take a look. How is Neo doing? Neo obviously had delivery report knocking on support. You're absolutely right. This right here, very strong support at around $18, down about 4% right now. Pretty much looks like all Chinese stocks are at the moment. And we've got Neo, Li Auto, Baidu, Alibaba all selling off here on the day. So, and PDD also down 3.5% right now. So Meta really struggling down almost 1%. We got Nvidia down over 1.6, and Tesla's down over 21 basis points right now as well. Let's take a look at our FANG Mint stocks, see how they're doing. So we've got Nvidia down 1.4, Netflix is down 1.7, Meta is down almost 1, AMD, Tesla also just more or less down here. Apple is the only one that's kind of holding up. If Apple breaks below 159, then we could really start to move lower. Because last 5-minute last 3 5-minute candles, we've just been back and forth. I mean, look at how much consolidation Apple has had in the last 15 minutes. Down, up, down, and now we're pushing back higher. So quick predictions here from everybody. We've got 600 people watching. What does everybody think? A breakout above 160 or a breakdown below 159 for Apple? What does everybody think? Quick, breakout, breakdown. Breakout or a breakdown. Because that's really what's going to move the market, right? Right now we're just, the Nasdaq's just holding on. S&P is holding on. The Dow is holding on as well. But Apple, I mean, it really depends where it ends up moving. So, okay, breakdown, 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 down, down. Apple Breakout 7th September event. Yes, so 7th September iPhone launch. Should be interesting for Apple. We can live stream that as well. I think it's going to be around 10:30 p.m. here. So maybe I can live stream that as well. Maybe for like 30 minutes, see what the launches are going to be. Yeah, 10:30 p.m. here is going to be about noon. No, that's going to be about 1 p.m. Eastern in New York. So maybe we can live stream that on September 7th. Yeah, looks really weak right now. A little bit of validation, resistance there. So we got a lot of breakdowns expected. Let's see if you guys are all right. Yeah, right now it's kind of tagging along the highest volume bar at 159.50. So we're just kind of tagging along at this 159.40 level where we have a lot of volume. Oh, absolutely. Apple would be a steal in the low 100s. Absolutely. That would just be an incredible price. Yeah, lots of consolidation for Apple here. The NASDAQ almost like, it pretty much did fill up the entire gap, so that's good. You can see SPY not quite so much, and the QQQs also here just kind of filling up the entire gap here, and then now starting to at least recover a little bit. HE says, not happening, we going up. Yeah, should be interesting. There's a big battle between the bulls and the bears going on right now. So volume indicator is just volume by price profile. So you can actually come up over here. It's not really, well, you can add an indicator here at the top. It's going to be that volume. Wait, I don't have that over here on this chart. I have it on this chart. It's called VRVP, number of rows. So volume range, volume by price. You can search up by different names there. But you can also do it over here on the side panel. You can come up to like 1, 2, 3, 4, 5, 6. So you can come up to the 6th tag here, 6th option. You can select all the way down here, fixed range volume profile. And then it'll give you like a good, you can pretty much draw the range and it'll give you the volume for specific stock. There we go, Apple pushing up here, showing some momentum. We were so close at 159. We were so close at 160s. Right now we're trying once again for a breakout above this 159.87, $160 level. But we'll see if the bulls have what it takes to push past. Looks like we do. No, but just getting tagged here so far, 159.80s. 160 is the high for the day. On the dot, 160.01. Yeah, Alex says Apple record buybacks, money are enough to save the stock every day. Yeah, they've been buying a lot of shares, right? I think in the last 10 years, they've bought back over $500 billion worth of stock. Their own stock back, which is obviously a crazy amount if you think about it. So once Apple does break out, the NASDAQ should also start to push up. The S&P should also start to push up. But of course, that depends if the bulls can take us further here. So while Apple is fighting back and forth here, Nvidia is trying to recover a little bit. Tesla's still under 280. And we got Meta slightly down about 21 basis points, also trying to recover. So Okta is up 5%. LABU is up 1.3. So we don't have, well, some of the biggest gainers are going to be Okta. We got ASML, we got LABU, we got TrueLeave. Wow, look at Apple, like just getting a rejection there again. But the ones that are down quite a bit, Peloton down over 7%. Wonder what happened there. Arnold says you need music. What kind of music does everybody listen to? Like lo-fi for market open, or should we just really go with, just something crazy for market open? Just hip hop, death metal. I've never really been a huge fan. I could listen to all types of music, country, hip hop, trance, EDM, whatever. But I've never really been a huge fan of metal. Like rock and metal is just something that I really never got into. in the indie music. Yep, Green Day. That's a good song. It's a really good song. Bollywood metal. But anyway, so Peloton down almost 7%, Neo down over 4%, everything else down 2 or 3%. Apple still just struggling really in the 160s, high for the day 160, and then of course support level at 159. We're going up there for another retest here to see if we actually do break out. I like metal, gold and silver. Well, that type of metal I also like. So, yeah, we got a little bit of a push higher than a gap fill. Now we're just moving sideways. I think Apple is really what's going to dictate today. If Apple just fails to break out, we might as well just consolidate sideways. But if you do get a breakdown below 159, then, you know, unfortunately could turn into a day where we start to kind of pull back intraday. So I would really only be paying attention to Apple on the day, see where it kind of ends up, because it's up another 1% today, right? Which is a very good move for Apple. It's a very, very large cap tech name, and it's going to really move expectations and sentiment overall intraday. Right now, there's just lots of consolidation, and volume really isn't there, right? 10 million shares traded so far. We've seen very, very low volume bars. Yes, so Granta, I can go over what the numbers were today. So numbers, we basically added over 315,000 jobs. So we can actually go over to econ days number again. So let's just come over to. So we added over 315,000 jobs in August. The unemployment rate goes up to 3.7%. So we saw a 20 basis point increase in the unemployment rate. And the market now is starting to kind of anticipate again that the Fed might pivot, right? So if you take a look at this Fed Watch tool, now a 38% probability for a 50 basis point hike and a 62% probability for a 75 basis point hike. So we're seeing a little bit of a shift in those expectations again. And of course, that was one of the reasons why the markets were pushing higher pre-market. We saw a big lift in overall sentiment, but of course, after the markets open, we kind of filled that gap on the downside, and now we're just trading sideways. I do think the markets want to take a little bit of a step back. They still want to price in a pivot, but not as aggressively as what they did last time around, right? From back in June to August, like that 2-month rally that we saw, had the unemployment rate went up during that time, man, that would have been a very strong day. But since we just learned that the Fed doesn't really care about these things, right? They don't really care about if the economy weakens or if unemployment goes up. All they really care about is price stability. They want to continue to be hawkish and be more aggressive with interest rates. I think the market wants to still anticipate, but wants to do that cautiously this time, because, like I said, the last thing we want is the markets to make the same mistake again that we just made, anticipating a pivot. And then Jerome Powell comes on board and just, throws water over that entire rally. So I think the market still want to anticipate, but more cautiously. So Musicful says the markets seem to be learning their lessons. Yeah, that's true. I think they still want to do that, but a little bit more cautiously this time. Not really get ahead of ourselves without even the Fed's green light. And I think we will hear that from the Fed in the upcoming speeches, and we'll start to get a very good sense, right, with what Jerome Powell says. That's why it's going to be really important. If he comes out and says, okay, inflation has improved dramatically in the last couple months, it's getting closer to our target, we're now starting to have that discussion of slowing down or cutting pretty much not going as aggressively as before, that's going to be the green light, right? That's when the market can, okay, there's now starting to talk about a pivot. Now we can start push higher. But right now, there's just nothing, right? Nothing. So anticipating a pivot is just breakdance. Apple really, I mean, come on, just pick a lane, pick a direction. So much consolidation. We just literally got tagged at 159.85 again. 160 is now starting to pull right back down. Further retest at 159. Since the open, we're just like back and forth there. Nina says hit the like button. Yes, please make sure that you hit the like button. Right now we are at 268 likes, or just under 300 likes. So make sure that you do like this stream if you are enjoying. Upstart coming down to my buying price. Well, it's going to be closer to $15, the buy price. So still waiting on that level. I don't think it's anywhere near close to that right now. Peloton, I mean, just really getting destroyed here. What happened to Peloton? Nope, this is from 2 days ago. So we don't really seem to have anything on TradingView in terms of a catalyst. This might be moving Peloton stock. But yeah, down over 8% at the moment. All right, looks like Apple is making a move here, closer and closer. S&P just broke down below 39.81. And the NASDAQ also got an alert to make a new low of day. And there we go. Apple starting to break down below the low of day. This will turn into a rejection or resistance now. We'll monitor this to see if we actually do get a little bit of a pushback higher. Lots of people were anticipating a breakdown, right? Many people said that. Up there, down, 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 breakdown. Yeah, Peloton recently had earnings, but I think it was like a few days ago. Yeah, they had earnings on August 25th. Miss on both revenue and EPS, but surprised, like the reaction came in 4 or 5 days later. So NASDAQ is now red, S&P 500 just more or less flat, and the Dow also just following the S&P, only up 24, 25 basis points right now. Were they not up due to the Peloton Amazon deal? Yes. So they also announced that Peloton is going to be selling their bikes and stuff on Amazon. So that definitely was a big catalyst. But yeah, I think earnings were miss on both revenue and EPS. So right now they're obviously selling off. All right, everyone. So that is going to be it. This stream has been going on for a long time because we covered the unemployment report as well. So thank you so much for joining in. I really, really appreciate it. Make sure that you drop a like and, of course, subscribe to the channel if you are just joining us for the first time. We talk a lot about, fundamental and technical analysis, macroeconomics, stocks and options. Pretty much those things are our core foundation. Of course, Discord link is going to be down in the description if you want to join. It's the first week of the month. Usually the best time to join, and I'll open up some spots for a few people if you are interested. That'll give you access to, of course, all the alerts and ideas and the market updates and all the downloadable PDFs and calendars and spreadsheets and all that stuff. So thank you so much. Have a great long weekend. Again, Monday is a holiday in observance of Labor Day. So I'll see you guys on a Tuesday morning for another Market Open live stream.